Welcome. I am Ernie Goss, research faculty member here at the Craig School of Business at Fresno State University here in beautiful, beautiful Fresno, California. Today I am here to talk to you about our survey of businesses in the four-county metropolitan area of Fresno, the city of Fresno, of course, and we're talking about what's sometimes termed the Central Valley or the San Joaquin Valley. It's a leading economic indicator. What we're releasing today, and we've been releasing it for several years now, is a survey of businesses in this area. And what they see today, we're likely to see in the overall economy. That would be the Fresno economy, that would be the San Joaquin Valley economy moving forward. So what does our June survey say for the businesses in the four-county area? Well, the overall number was down a bit, but still in very solid range, a very good range. Looking and our inflation gauge at the same time, it's indicating a little bit more inflationary pressures than we'd like to see. When we ask the businesses how much they expect prices to increase over the next year for those products that they purchase, that's those products that they purchase, they said about 6.6%. Now that's a concern. In other words, inflationary pressures, certainly for food and energy, and of course food production here in the Central Valley, the San Joaquin Valley, the Fresno metropolitan area is very important. And we're seeing we're seeing some of those inflationary pressures are getting a little bit too high, at least for my concern. Of course, the Federal Reserve, who sets interest rate policies based upon inflationary pressures, based upon what's going on in the economy, they don't see it as much of an issue as I do. This month we asked these businesses how much they expect their insurance costs to go up for 2015, about 9.6% growth over what they're paying in 2014. I'm on the side that says it's going to be even more than that. I expect 15% growth from 2014 to 2015 in terms of insurance costs. Where are we seeing the growth also in the Fresno economy? Well, we're seeing it in construction. Construction is coming back. Still not back to the levels prior to the recession, the beginning of the recession in December of 2007, but it is doing better. We're seeing that in terms of wholesale trade doing very well. Now on the negative side, and you know, we economists, we're often called the dismal science for a reason. We are called the dismal science for a reason because we tend to look on the negative side. A lot of businesses are still relying on employment services. They're hiring temporary workers. That's a lot of the growth in employment. But the employment gauge for the month was very strong for the four-county area. I expect that to continue. We're going to see improvements each and every month going forward for the area. When we looked at new export orders, unfortunately dropped for the month. Now that's a real concern. Exports remain a very important factor for the overall regional economy. That's one of the troubling areas that we saw this month. But again, when you put it all together, and I'm putting it all together for the Fresno economy, the San Joaquin Valley economy, the Central Valley economy, it's strong. It's what I'll call a Goldilocks economy. Inflation is a little bit higher than I'd like to see, inflationary pressures, but the economy is growing, and we're seeing that, and we're seeing the economy coming back for the area. I expect that to continue. So what are the risk factors, or what are some of the indicators that you should be looking out for? Are you consumers out there, you businessmen and women looking forward? Watch the employment report, which comes out this Thursday. That's July the 3rd. Normally comes out first Friday, coming out the Thursday because of our July the 4th holiday on Friday. Watch out next month, August the 1st, for the purchasing management indices. That's a leading economic indicator as well. What's that number? If it should get above 60, somewhat of an issue with inflation. Gets below 50, more on the side of recession. So anywhere between 50 and 60, those are good numbers. Watch out for the inflation number that comes out about the middle of every month from Bureau of Labor Statistics. When that number goes above 3%, I get concerned because that will mean then the Federal Reserve would begin raising interest rates faster than we would like to see them raise them. Right now, I think we're going to be seeing an interest rate increase maybe in the first half of 2015. Now, if inflation ticks up even more than what we're seeing now, it could tick up even, we could see that moving faster, maybe as early as January or February of next year. But right now, it's in the first half of 2015. That's a rate hike. So all in all, it was a good report for the area. I expect the economy to continue to improve. So Ernie Goss here, economist, research economist with the Craig School of Business in beautiful Fresno, California. Until we come back again next month, first business day of next month, may your economic cup runneth over, and I'll see you then.